Good morning, everyone. All right, so we got something of a decisive pattern here. So yesterday, the theme was, things have been quiet for a couple of weeks. For the most part, everybody's walking on eggshells. Trump this, Trump that, comments. Um, and so the spring's getting wound. And I explained how the moving averages are getting tighter together. Again, visual aid to kind of read into things sometimes if the day-to-day price action is making noise. And so yesterday, the day started out with that big jiggle, right? Things went up, they spiked back down, and then they kind of started moving up again. And so this, you see the pullback here on the S&Ps, coming down overnight toward some support, back up again. So they're recovering from that little dip, moving back up toward yesterday's high. And I'm thinking, well, there's usually, not usually, but many times there is a little action before a report. And so this Jolts report can be a market mover. And maybe to be quiet into that. I don't suspect we'll take out this high. But right now, forming well, let's just say a trading range within a bigger trading range. And so we got that. And, for the moment, we've got, you know, pivot high, and then the bottom of the range, and ultimately the top of the range. So yet yesterday's reversal, so looking at the prior 4 days before that, and even this one, you got a wide range bar. We apply what we call the factory work. The closes are in the upper half, actually the upper quarter or so. This was the correction bar, which we know now in hindsight, since yesterday was a dip and made a higher low, and it closed near the high. That's suggesting it's going to go up. Now we're looking for that to happen. So we've got a bias. It shouldn't go back down below here. It shouldn't, ideally, it won't go back down here. And this will resolve itself, pushing higher. And so that's what we're waiting for. The weekly, as you can see, has just been a consolidation of this move up. And, the past 2 weeks trading inside of the prior. And so far this week, more of the same. But it's only Tuesday. So back to the same here, right? We had a little bit more of a bias based on yesterday of the up arrow scenario versus the low arrow scenario. Now we just wait and see. And overnight price movement, as you mentioned, the dip was bought. It's recovering back up toward where it was yesterday. And so we continue. Wash, repeat. NASDAQ looks a bit better, up near the highs, recovered, coming up toward the pivot high. Same scenario of trading range within bigger trading range. Things getting tighter, waiting to see which way it's going to break. And again, the price pattern suggesting up. So, and that's where initially he said, I marked this shock bar against the trend. So far, the shock bar hasn't produced anything of significance to move lower. In fact, when it went down, buyer stepped up again and pushed it back up to that area of the top of the wide range bar. And so there's an example why we say that as long as the opens and closes stay up there, you can get dips down deep as long as they turn into a bottoming tail bar. And that's what happened. So as we build on this sideways situation and apply bar by bar analysis, it increases our bias that prices should move up, and we wait for that to happen. And shock bars, we don't want another shock bar because a second one is likely to send it lower. And because, as explained, as more bar by bar analysis comes together, it increases the bias across many individuals and institutions that are coming together. And so that's part of the thinking behind the spring getting wound. So a strong move, everything's wild down here, right? Liberation Day, oh, Liberation Day's off, blah, 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 right? Tightening up, get out. Whoever's thinking buy the dip, right? Sell the breakout, comes back in, tightening up, tightening up. So the more this price data evolves, the more it starts to bring together differences of opinion. And so it needs to resolve itself to the upside, because otherwise, that resolving of opinions, and this is again why bar by bar analysis is so powerful. We're creating a bias, as explained, that this is going to go up. If this, say, was to gap up tomorrow, or we get another bottoming tail bar and a big nasty close, that bar by bar analysis has to push you toward changing, even though this trend is up. And it's a powerful thing because human nature wants us to be right and not lose money. And so, again, we need tools that enable us to change. So far, the bias is this is going to resolve itself to the upside. All right, other markets. Sort of the same, a little weaker, but look, this is already exceeding the pivot high over here. So a speculative instrument acting a little better at the moment. So that's another positive. The Dow, remember a week ago, we're talking about this. It hasn't resolved itself up or down yet. Just slopping back and forth, trading range, indecision. Um, Bitcoin pulling back to support, a little bit of a deep pullback. But we look at the weekly chart. So when we look at deep pullbacks toward a support area like this, where it consolidated, you can see the, you know, topping tail, but it's an inside bar on the weekly time frame. It's not like it made a higher high and you've got a big topping tail. So it's meaning it's not as bad. This consolidation, which we know is at resistance, it's bar by bar, side by side, versus another bar up and then a deeper pullback. And so let's see, buyers should be stepping up here. Gold down a little bit, had a good day yesterday, so probably a resting day, and big trading range. Silver had a good day, finally broke out. We were able to point that out pre-market yesterday. That was a long, coming up toward the top here, and now probably consolidate. So far, these look like they'll go higher. Good morning, Tim, and others there on social media. Head and shoulders bottom, good day yesterday, consolidation, and I guess we'll be waiting for economic reports. Interest rates, and we're almost done. Kind of early because not much is really happening other than, we had some things come together to suggest higher, but now we're waiting. Interest rates are a bit of a mess. You see my wonderful drawings here of the head and shoulders, the support, the up and down, which way is it going to go? And maybe today's numbers will help move things along. As far as gaps, gaps in the broader market, none. Right? So unchanged. Came off of, how low was this? Oh, it came down in the middle of yesterday's range, give or take. Just eyeballing the cursor on the daily chart when I'm moving it here on the 5 minute. So, it was a decent dip down, but it's come back. So confidence in buying the dip, but it's got to get out of the way here. Can it get above? And so we move our little alarm up there, that one up there. Transports down a little bit, not a big deal. So no matter where we look, it's just a kind of a wait and see for things to resolve themselves. And our bias is going to resolve itself to the upside. And we'll see what this report brings. Dip was bought on the transport, so another positive. Strong close near the high. Right? So that one didn't get very far, but it was close to this high here. Now, a little additional correction through time and a strong close. The overnight dip was bought. Took it back up, right, toward yesterday's high. And maybe it jiggles around until 10 o'clock, right, when the report comes out. We'll see. So unchanged is going to end the report. You know, it makes it more difficult as far as the uncertainty of what will happen after that first half hour when that number comes out as far as credit spreads. So yesterday's extremes never got close. Looked like maybe it would on the upside, but didn't. And so unchanged. And those are yesterday's numbers. They give us a starting point. 60. So look, things are unchanged. They dipped down, they came back. And so one of the observations is how much does it change from yesterday based on yesterday's price movement and the overnight price movement? Does it actually, that bullish price action, does it actually bring up the strikes? Or it kind of gives us an insight into the sentiment or how they're thinking. So that's a significant move up under yesterday's low, which is kind of close, too close. And yesterday's range was that yesterday? Probably had no, that was probably that should be yesterday. Right? 75 points. So from that close to there, not very far away. I'd have to go to another screen to see what the average range is, but that's pretty tight. So as things getting tighter and tighter here, the strikes are getting tighter. And I mentioned yesterday that as they get tighter, we're getting closer to one or the other is going to get hit. It's just common sense. As the spring gets wound, at some point it's going to break out or break down, and you don't want to get caught in that. So just sharing the thought process. And with the number coming out, it's better to wait until after 10 o'clock. At least this one is moved up above that pivot high, but that is also within striking distance on a report, but because there's a void to that. Okay, that's actually there. That is really close. So yeah, I think best to just sit on the sidelines until after 10 and we'll see which way things go. Well, yours, Dan. Oh, thank you, Brett. Brett sharing 14-day ATR. So I use a 5-day ATR, Brett, to say what. So I would imagine it's tighter than the 14-day being 69 and a half. But using both, I mean, I can eyeball this, and that's within striking distance. But again, if it moves up ahead of the report, get it on the other side of 6,000. Good morning.
So we're going to be having a MT live on inverse head and shoulders soon, and that's what the cues are. There are many bullish inverse head and shoulder and an uptrend here. And whenever we get a downside shake like this, yeah, of course we were thinking bear call credit spreads, but still in an uptrend. And then when it has some type of bullish action back here, my immediate thought is if it can go sideways, then we're building an inverse head and shoulder. And that's exactly what we have going on right now. So yeah, we're still bullish here. Internal's neutral. As always, let's look at alarms here. Rocket Lab. Greg mentioned when, like Bitcoin, when things um, come in steep like this, you don't expect a new high. But I posted this as a put spread idea. I'm also GME, same. I would never expect a new high there, but you got a nice pattern intraday. You got a void, so day trade long, it could still go up to 33. Even halfway there would be a nice little swing gain. But I posted that as a put spread also. Yes, Robert, it is just for that pattern. And if it doesn't have the symmetry, for example, sometimes you hear me saying, "Oh, it's a pseudo and inverse head and shoulder," but I'll mention derivatives of it. I'll say it as a lower right shoulder, a smaller left shoulder, but that's just for definitional purposes. We still trade price action. And yeah, I need to give some examples of that when we do them. So that's the answer. XYZ, I saw going by the ticker, so I pulled it up. That's a nice, that's an ignite, well, 6382. That I wouldn't call it igniting per se, but a bullish gap. So this would be a great 30-minute high. I posted it as a put spread, but I like it as a directional too. 30-minute high. That's a big bottom. Look at your 20 and 50 MA are in perfect arrangement, confirming a long-term bottom. You got a void target, I don't know, 68 to 70. Now the weekly is up 4 weeks in a row, greater than 100%. I get it, but this is a beautiful W retest pattern. So even though the weekly's up a lot, it's still bullish, but I'm trading the daily. I'm not trading the weekly. So that I like a lot. Let's see what that, I got it in the bottom right. I got this Ka here in the middle. My alarm went off a couple times yesterday, and I said I was going to post it today over the high, and then it it got an upgrade, so it's gapping up, so that's kind of messing up our entry. And we always make a judgment call. Do we want to take half lot or whole lot home into the close? And since the hourly charts rallied into resistance, I did not want to do it. And I don't know, we'll either miss it or we'll watch a pullback and see. APP alarm. This was a put spread idea. It looks like pre-market my alarm went off. Let me just reset it because it's since come in. That's continuation pattern put spread, but wow, now it's down $5. So just reset the alarm and don't worry about it. CELH alarm. This is one I'm not in a rush, but I like the consolidation daily, weekly, monthly are all in alignment. So just patiently waiting for my daily setup. And finally, Tossed. Toss. We bought call options. So my up alarm 4350 went off. But this is a nice pattern. You got it. That's an ignited, yeah, breakout. I mean, ignitings are more obvious like that than the XYG, but it's extended. So just because it's igniting doesn't mean you buy it. But I love this new low reversal. So this buy setup failed, which is not atypical when they follow a Plimo. And that's exactly what we look for. It is a new low reversal, and we got it. We got bullish weekly, bullish monthly. So we bought calls on that yesterday. Let me reset the alarm again. Yeah, back to 43.50. Just went off pre-market, so I'll just reset it. All right, let's go to earnings. There's not many of them. Curdo 73.50, bullish gap, but too big. PDO, mass, you're gone. Ferg 202. Wow, that's a big gap. That's a big gap. Now that is not a quality on top because this is a bullish move instead of one that leaves a big bearish momentum void. So this was a pattern that I would have more of a bullish bias over the high of this red bar, but big gaps messing it up. Dollar General 105 and change. Big gap, no pattern. You know, DCI. It shows it up here at 73, but there's no volume, so I don't trust it. NIO, big mess. Ollie North flat, big old mess. This is what I call a headache pattern. If something looking at it gives me a headache, then I guess I stay away. Although I was considering selling the 95 puts, just because even on a headache pattern, look at it. You just focus on the major support pivots. So the only reason I didn't do it is because it was 3 weeks. Nesser, big old mess. C-turn, $32. Gap's too big, but nice. Look at the monthly here. Monthly, that's a nice bottoming pattern. Monthly. Yeah, Thomas, I already discussed XYZ. I don't know if you were here. I gave it as a put spread right out of the gate, and I like it 30-minute high or some derivative thereof. I have it on the bottom right. All right, SEG entered a deal. This is a nuclear company. Entered a deal with Meta, I guess. Meta, right? Amazon or Meta, I forget. And that's an amazingly bullish gap. So I looked at some of the cousins and the ETFs, and they're just up too much. Look at NLR, gap into 102. What can I do with it? URA here, another one, similar, just cheaper. Bullish, but what can we do? Thomas, FBL. Yeah, it's an igniting. Yeah, I like it. And it's a nice 15-minute chart. It's a nice pre-market. Yeah, it looks great. Yeah. We'd prefer 1, 2, 3. But that's many times I'm like, it's up a lot, it's near resistance. And I give you reasons why I wouldn't buy over the high. This one I would. It's a closing breakout, igniting bar, bullish 15. You got your void, bullish weekly. And that's a granite. That's an ETF. I didn't even notice that. What is granite? FPL granite what? It's granite. Okay, it's Meta. Okay, well we're already in it. But we are in METU. So we bought this yesterday. Oh, that's Facebook. Am I getting these missed? No, that's Meta. That's meta. So yeah, we're in it. Looks good. But yeah, your FBL, yeah, looks good. Why would they have so many doing the same thing? I guess just competitors again, um, because of they're doing the same thing, but their competitor ETFs or fidelities, whatever, and they want to make money on their own darn ETF. All right, so I did that. APLD. Let's say this one, I would definitely want a 1, 2, 3. Why? Because it's up too much. It's far from the 20. So see the difference of that versus FBL? Although this 15-minute chart is holding like a tank, so you could day trade it one. Z Lab, it's a bottoming pattern. Look, it's a symmetrical type triangle. You got higher lows, you got lower highs. It's coming into this apex, converging MAs. It wouldn't be bad. Maybe see if there's a put spread. Pins is on my list. I got a upgrade or something or other in the news, so I looked at it. So this is a long consolidation. Got a little hooker pattern here on the weekly with a void. So that looks good. Just patiently waiting to see what it does on this $B. That one I do not like. Why? There's no void. Look at the resistance to the left, and it's gapping down here pre-market, a little bit of relative weakness. So even if you did get a 1, 2, 3, there's no void, but I just noticed it's mining. And so, yeah, gold ripped yesterday. Look, GDX is superior daily pattern to B. See that? Superior. Gapping from consolidation. Yes, this was resistance, but this 1 month base suggested it would go through it, which it did, obviously. That's all-time highs on GDX. So actually, I like the gap down. So let's scan, or if somebody wants to help me in the morning, let's scan gold and silver stocks. SFM alarm. We did a put spread on this yesterday. Up alarm just went off. So we covered half yesterday for 50% of max value in one day, even though it's a 3-week out. So I might move stuff 30-minute low or whatever, just as a management thing. CELH alarm just went off again, but still too early. All right, NLR is another nuclear thing, but pattern. NRG, at least, see, now this one's a bull rectangle at least. The problem is, I wish this entire rectangle was lower. See, it's look how far the 20 and the 50 are. So if I were to take off all the candlesticks, then that's telling me it's extended. So again, I'm repeating myself. That is a bullish rectangle, without a doubt. Just too extended for me. That's the problem. But day trade maybe. You're just pulling back right here in a controlled way to give you a 15-minute buy setup. I got BNTX yesterday. I missed this one, and so that's my mistake. You know why? Because Myrna gapped up, and Bentex is a cousin. So automatically, I like looking at cousins, and I didn't yesterday. So I kind of didn't follow my own, indirect watch list. All right, I got filming something right out of the gate. What was that? Oh, it was a different account. That's why. All right, never mind. A GME alarm.
This might be a sucker push. This future's moving up like this
But why do you say that?
because the S&Ps are pushing right into the high there, and they've moved up from the overnight low. So from a short-term perspective, this sure isn't the place to be pressing the button to buy at resistance. And with that number coming out, and anything anybody that was in this overnight, they're going to be selling some here. The best looking one intraday is the Russell, but that's short-term extended too. It just I wouldn't be entering right here in this moment. The bias still exists from yesterday that it should go up. But if you're day trading, this wouldn't be the place to be pressing the button.
Right, GME alarm. So if you get filled on that put spread, APP alarm. So that's fine if you get filled. I know that one was a little spreadier. SFM ripping here again. Let me check the midpoint. I mean, Greg even made the comment to me over the weekend when I showed him this one. He says, you can really get premium at 160. I'm like, yep. I mean, it's 3 weeks out, but still. Yeah, it's 20. Yeah, let's close it in the strength here. That's we made another 50% of 50% of 50%. Oh, Sam, are you there? I forgot to talk about that. Um, I must have deleted it by mistake in my earnings things. I had that SIG short strangle that I was bidding 60 cents to get out, and I just got filled on that on the little pullback there. I I bid that just because the upside was looking like it could have turned into pain. That's a big old gap. So I'm out of mine. And diamonds holding the best. The other ones pulled in, as Greg was surmising, but look at the diamonds. I gotta see what's in there. Holding it up. XYZ bottom right. Pulling in, so we might get filled on the put spread, but that's good. We get to hold off of the our toast is coming in too. Shoot. Yeah, so I'm chilling here. All right, diamonds. I see that, Greg reviewed them all pre-market, but yeah, that one's a mess. You got no void on this one. Hey, Oracle long. Where we bought calls on that yesterday. Yeah, I posted TFX yesterday. My alarm didn't go off yet, but wait, or maybe it should have. TFX. Because I posted it under 119. Ah, yeah, there you go. Okay, so yeah, I guess my alarm didn't go off because it went off yesterday and I didn't reset it. But yeah, we're in it. TFX 118.99. Yeah, that's good. Our HI is also good to go under yesterday's low. We're calling, we have 165 calls. All right, yeah, we're up $1 in Oracle. Look at that Ka middle chart is still ripping. This is the put spread side. No, I didn't get through my whole list, but look at Joby. Nah, gap's too big. Dude, our toast is not acting right. Yuck. Could not have done that. Will be gapping down a little. Are you in? That's fine. We got short puts. Rocket Lab coming in so that you should get filled on those puts if you want them, but I don't like